Hello, it is Friday the 11th of July 2008, and this is Brian Shannon from alphatrends.net. One of the premises of technical analysis is that a trend once established is more likely to continue than reverse, and that's exactly what we continue to see here for the major indices and a lot of individual stocks as well. S&P 500 was down again today, down $1.28 or just about 1%, and made a lower low and closed at the low for the day as well. I've got some bad data in here. Basically, this was the low for the day on the S&P 500 at about 122 and a half or so. I don't know what this bad tick in this one are, but we've still got this declining 5-day moving average, and we're also, of course, below this trend line as well. This little level right here will take on some significance early next week, just under about 125.60, and then as I mentioned yesterday, that 128 level. It's going to be tough for this market to go higher, as it's likely to encounter a source of supply at basically each one of these levels. So there's a lot of damage done, and the market just doesn't heal itself very quickly. Any rallies that we see materialize from this market should be viewed very suspiciously, because we are in a primary downtrend, we are in a bear market, and we're getting the rubber band keeps getting stretched deeper as we go here, and the volume gets bigger, but that doesn't mean the market has to bounce. So we saw that again, a real extreme volatility in here today. The market saw a little bit of strength early on. Sellers came back in here, took back control above this VWAP, and then they pushed it back down at the close. So again, I've got to reiterate the fact that you've got to be an extremely aggressive trader in this market to have a chance of making money. You've got to be quick to take your profits long and short. Obviously, you can make a case that trend trading, and I'm saying for shorter term traders, because the clear trend here since breaking below the support in the 50-day moving average right here on this day, June 6th, basically, we've been in a clear downtrend. If you've been holding that whole way, well then there's a bigger case for that buy and hold. But I'm speaking from my perspective as a shorter term trader, and I put a couple of stocks up during the or charts up during the day of the market, and I'm wondering if that's something that I shouldn't do, because the market is just moving so quickly, and unless you're really running a chat room, which I have no interest in doing, I don't think it really makes much sense to post those. Anyway, any feedback there would be appreciated. The downtrend is obviously still intact. If we back up to a monthly time frame, we can take a look at Fibonacci and say, from the last bear market low to the recent highs, we're maybe going to head down towards the 50% retracement level near 118 or so. So we still have room to, that's basically 50% of this move here, from the lows near 77 up towards the highs at about 158 or so. 38.2% held here. We got the bounce. Now perhaps we're headed down towards 50% or even 61.8%. Bottom line is, anyone that says they know where the market's going to bottom out is just a guess. The path of least resistance is lower, and the trend is your friend. That's what you have to respect here. The financials, let's take a look at those. Yesterday I said, a lot of frustration from people who are trying to pick the bottom in here. That frustration continues, as this group was down another 2.5% today, down 47 cents. This group, I think I said yesterday, was a great destroyer of wealth, and that's exactly what's going on here. Is people are getting crushed in here. Don't look at it as down too much, because each day it seems to go down further, and it's no different than, again, trying to pick the top in oil. A lot of people were thinking that this marked the end of this rally, but instead what it did was it just sucked in more shorts to get squeezed, and that's where the oil continued higher once again today. You can see it opened near, almost at the highs for the day, but clearly the uptrend is still very much intact for oil. No reason to be looking for a top in there. Again, like I said yesterday, it's going to have to get at least below this level, and that's 106. That's $11 away for the USO before we could think that that this market might sustain any downward momentum. So stay away. XLF, stay away from the long side as well. There's just going to be, this is just a badly damaged group that you're going to see rallies, of course, but they're going to tend to be short-lived and very volatile behavior in this market. The IWM was up today. The IWM was actually up for the week 1.5%. So we saw that big day on I guess it was Tuesday, Wednesday, Thursday, Friday, right? So big day on Tuesday. Market didn't really give much, all of that back rather, but clearly the trend here. We've still got a damaged market, declining 10, 20, 50, 200-day moving average. I still think these levels are looming and probably will get undercut. If you look at the monthly time frame, it's kind of looking like a big head and shoulders top in here, and that would be pretty deep implications down towards 45. I don't think you can really look too realistically at price targets based on monthly time frames. It's something to keep in your mind in the backdrop, but certainly nothing that you can trade off of. This market is going to still need a lot of time to fix itself. It's not going to fix itself because the federal government does something to make it easier for anyone to borrow or any other reason. It takes time to work these problems out, and that's what it takes to heal. The Nasdaq 100. So a further weakness in here, 1.5% with its 72-cent loss today. We did undercut that level that I thought maybe would lead to the next shoe to drop. And right in here, I had posted a chart saying we're at a pretty critical level as it broke down through support. That support had the chance to become resistance there, but the buyers came back. That was also this level right here with the daily VWAP. You can see it recaptured that, shook people out, and then we really saw that rally here. But still, it's just a blip within this primary downtrend. All we did was get back into this range. Nothing bullish occurred in the Nasdaq 100 today. The bigger, more important level of resistance for this market to get above right now remains 46, and we're in a bear market. I would expect that we'll still see lower prices ahead.